And to new developments in Nigeria's financial sector now, Unity Bank and Providus Bank say their proposed merger is moving ahead smoothly after receiving overwhelming approval from shareholders at a court-ordered meeting. The Central Bank of Nigeria has supported the deal with financial accommodation, while the Securities and Exchange Commission has issued a no objection, effectively clearing major regulatory hurdles there. The merger is in line with the CBN's recapitalization drive to strengthen banks and capital base and reduce risk in the financial system. Once completed, the combined bank will exceed the 200 billion naira minimum capital requirement for national banking license, placing it among the 21 banks that have met the new threshold. Joining me now to discuss this in a lot more detail, as always, is Arise business analyst Chika Mbonu. Mr. Chika, good morning to you.
How are you today?
Very well, thank you for asking. Have you?
No problem at all.
Good. Let's begin with Unity Bank and Providus Bank merger. What should we know about this?
You've said so much in your rundown, basically. The first thing I want to say is there have been some news out there in the social media and press the last 24 hours or so, saying that it's stalemated because of things that had to do with insider-related loans. And I just want to push that aside. Luckily, there have been refuttals of such, and I can confirm that that's what. You see, this merger or business combination, as case may be, was one of the options given to banks in the recapitalization journey, which we know will end up by March 31st, 2026, barely in a month, 6 weeks' time. And Providus and having their own, growth, objectives, and then Unity having their own objectives to achieve the capitalization, decided to come together and combine their business, in mergers, whatever word you want to use. And very regulated institution, banking, two institutions coming together. There's a journey, an outline journey that you must go through for the two banks to become one ultimately, and they have gone through that journey, and it involves, as is already said, getting approval from Central Bank of Nigeria, SEC, because of the fact that the Unity Bank is quoted, even Nigerian stock NGX, and so many other agencies. But one of the important aspects of it is the fact that the shareholders of the two institutions must agree that they want to come together, and they will have to hold their different court order meetings to make sure that happens. Providus did their own 100%. Shareholders said, "Let's go." Unity did their own, and then got about 98. About 2% to let's hold out. And ultimately, what happens is that you carry everything and go to the court and say, "We have done all we're supposed to do. We've complied with the processes, sanctioned the merger," and that's when it becomes one. And once that is done, the banks become one, and the other journeys, things that have to be done to comply. I want to assure you that all those have been done. They are at the level now where they're waiting for the court to sanction the merger. The one or two holdouts, I think, arising from the little percentage holding I mentioned, in that 90% that came from Unity Bank that agreed, said yes, and 2% didn't say yes. And I think those will be cleared shortly, and then the merger will be given a go in time for the March 31 compliance.
So quite a catalogue of boxes to take, and it's great to hear that all of these have been fulfilled. Let's look next at the President Bola Tinubu saying that Africa needs its own credit rating agency. What's your take on this?
See, a credit rating agency basically is a firm that evaluates how likely a company, a country, will be able to pay back its loan on a timely basis. That's basically what they do. And they assign credit ratings to that company or that country, depending on the gradings, principally. And those ratings are very important because they help investors to decide whether to give the money to that company or this country, and at what rate. Now, the lower the ratings, the higher the cost. The lower the rating, the higher the cost. And this is the crux of the matter. That there are three principal rating companies in the world, Moody's, Fitch Ratings, and S&P Global Ratings. Those control about 95% of rating business around the whole world. I mean, if you don't have the tray, it's a problem. So what happens now is that Africa is disadvantaged by this rating agency. Remember, I said that the rating determines the cost of borrowing. First of all, whether they give you the money and at what interest rate, because the higher the risk, the higher they charge you for it. And so a lot of the ratings have been given to Africa, having low ratings.
And we're at the mercy of his ratings.
And then, so the investors always add what they call an African premium to the interest rates. And these African premiums have become burdensome. They run into billions of dollars of additional interest on that will ordinarily will be used to do other things in the countries. And this is the cost of the matter. Because of the fact that these core rating companies, some of them, I said, are very far away from Africa. They analyze Africa from very far. They don't have local representatives. They don't understand the things happening inside Africa. So they analyze Africa from the external issues instead of looking at the internal things. And so this is a cry. The fact that these rating agencies don't, know Africa much. They don't understand African risks much. And therefore, the platoon, the risks very high, and the interest rates are very high. And a lot of times, a lot of countries that should get money. For example, the only 3 African countries that are investment grade, so you can see that in the whole African environment. Meanwhile, a lot of them have very good, So this is the cost of the story, that these ratings determine whether investors will invest in a country or not, and at what rate. And because of this, 3 non-investment rating companies are far away from Africa. They don't understand Africa. And so we need to get an African-based, African-knowing rating agency. But what do rating companies sell? They sell knowledge, competence. They sell transparency, and they sell integrity, acceptability of their ratings. So will an African rating agency that's based in Africa, made of Africans, have these elements, the competence, the transparency, and that to ensure that investors worldwide will believe it and trust it and spread the opinion towards investing in Africa. That's the crux of the matter.
Very important point you raised there, and we have to discuss that in a lot more detail on another occasion, because that's a whole topic on its own. Let's look very quickly now at the Naira strengthening to 1,337 to the dollar at official FX rate. We don't have a lot of time.
I mean, 2023-24, remember, everybody became an FX dealer. And we used to project, where would the rate be today? 1,000, 2,000, Some people came out and said Nigeria is finished. The rate will move to $1 to 10,000, and so on and so forth. So we thank God. And each time they ask me the question and say, where's the direction of the exchange rate? And I said, the price of every commodity is determined by the demand and supply. That if you have more supply of dollar, the exchange rates will moderate. And that's basically what's happened. And so that the demand to manage, supply to manage up and demand to manage down. And the Central Bank of Nigeria, through its own initiatives and policies, have helped in both ends. Letting supply go up and letting demand go down. And through their own policies, monetary policies and other initiatives they put in place. So commend the CBN for that. Now, but the other thing that has arisen from that is the fact that what we call sentiments. I mean, the sentiment is this, in exchange rate is this, that sentiments remove bunch-up demands. In the sense that if you see dollar now, because you're not short dollar will be there in July when you need it, you buy all of the dollar there you need now. And that too much demand comes now, puts additional pressure, and the price goes up. That sentiment has been removed by the policies of Central Bank, by the fact that the liquidity has gotten better now, supply has gotten better, our oil revenues have gone up, the export remittances have gone up, export earnings have gone up, and so on and so forth. So those have contributed to that. And then there's a moderation of demand, more transparency in reporting, and those have accounted for this, and the stability of the government policies, which are created sentiments that enables people now to hold Naira Before, when you hold Naira, when you get Naira, the next thing you do is go and buy dollar and put under your pillow. But you see a lot of people bought the dollars at 1,516. Now look at the exchange rate now, one trade. They have lost money. So that you know, so a combination of all those now, plus the things happening internationally, peace in Ukraine being talked about, Middle East being talked about, all those things, external influences are helping the sentiments that says Naira is good, don't convert to dollar, and along with the CBN confidence building, and those have helped in moderating the exchange rate.
That's a very welcome.
So we hope that that will continue. Consistency in policies, you know, non-reversal in oil prices, you know, and hopefully no major, you know, hemorrhaging in the whole system. No reversal of policies that will affect confidence.
Right, and the transparency and stability you speak of as well, great. I mean, strongest person since 2024, so very welcome. We have very little time left, so let's look next and wrap up with the presidency signing an executive order on direct remittance of oil revenues to the Federation account.
We don't know what it's happening, but let me just summarize it for our viewers. Basically, it says, remember, oil is our major revenue, and whether it's royalty, profit gas, everything. What used to happen is that before, oil money used to enter NNPC account first. Adjustments are made, deductions are made before it's given to Nigeria as a, you know, to use. You know, in that process, there are a lot of leakages and so on and so forth. We already knew from the beginning that the Petroleum Industry Act, you know, it wasn't the best, but we needed it to happen. And it was going to be reviewed subsequently. This is one of the process of making sure that happens. So all the oil revenue a lot of the oil revenue in the past used to go through NNPC. And then what happens is that NNPC makes adjustments and deductions and whatever, and passes on to the federal revenue. Now, this law says now all your money goes straight into the national purse before any sharing. That's basically what it is. And so the elements of that this is basically the substance of this. That instead of money going to NNPC first, before that, let it go to national ports before any sharing.
Right, you know, it's been a packed day today with the stories, and there's so much more detail that we'd love to get into, but want to thank you so much. I've been chatting with a Rise business analyst, Mr. Mbonu. Thank you. We'll see you again tomorrow.